with Patrick Brennan, Director of the Irish Health Insurance, as part of the Morgan McKinley Espresso Business Briefing Series. The topic for this morning is navigating the health insurance market, how the game is often set against companies and consumers. So we're here with Patrick just to ask a few initial questions on this topic. Firstly, Patrick, can I ask, how does the health insurance market currently operate in Ireland?
Sure. It's I suppose it's unlike a lot of other companies or a lot of other country health insurance schemes. Effectively, the way it works is it's a community-rated market rather than a risk-rated market, which effectively means rather than risking you based on your age and health status or profile, there is a set price for each plan in the market, and the risk, if you like, is shared between young and old. Effectively, that's underpinned by a risk equalisation scheme, which captures some of those funds and redistributes them out to insurers to compensate older people and insurers for the cost of older people. The issue, however, that arises in our system is that there's no unanimity on how well the risk equalisation scheme is working. So, effectively, in the absence of a robust risk equalisation scheme, insurers are taking matters into their own hands to some degree in order to maintain a commercial edge and remain competitive. And quite often the consumer can get lost in the middle of this.
Very good. And I suppose for people out there who have just received their renewal letter as part of their company health insurance plan, what do they need to consider now that they are approaching renewal dates when they're reviewing their existing plan?
Okay, there's I suppose the first thing is what you need to consider to some degree is dictated by when was the last time you had a review. And my opinion would be you need to look at this every year. Obviously, a lesser degree if it's been renewed last year or looked at last year. Effectively, you're in the realm of damage limitation at that stage in terms of premium increases. But certainly, if you're talking about 3, 4, 5 years without reviewing it, there can be substantial savings. Not unlike a market like mobile phones or certain telecommunications. It's a market that's reinventing itself to some degree in terms of what it's offering and the price that it's offering these product range at. So therefore, older plans, while they still remain in the market, very often have been subsidised by clones, if you like. Same plans are being reproduced at different premiums. So therefore, you can very often, with the right navigation, find almost exactly what you have at a premium savings.
And further to that, Patrick, what are the savings, typical savings? Give an example of maybe savings you've encountered at a company, and what are the basis of those savings?
Okay, a way of identifying some savings in terms of what, again, probably fitting in with your last question, what a company should be looking out for. A lot of plans now, the market has moved towards excesses for inpatient cover. So the likes of private hospitals, if utilised, would require the patient or the employee to pay an upfront excess of usually marginal fee, somewhere between 50 and 125 euros per episode of care. That alone, believe it or not, can yield savings of, depending on the plan and how old the plan you're on, between 20 and 40%. So that's one thing to look at, certainly. The other thing is small adjustments on outpatient entitlements, such as money back on GPs, or again, it might be something as simple as the amount of visits you're entitled to.
Great. And what are the benefits that a company would derive from utilising an independent health advisor like Irish Health Insurance as opposed to doing it themselves?
Again, I suppose it's having the expertise to navigate that market. We all hire professionals in different walks of life to do things that we simply don't have the time, the knowledge, or the will to carry on ourselves. And this is one of these, I suppose, one of these financial products that is getting harder and harder for people to decipher. And I suppose fundamentally the nature of health insurance and what it does and what it offers to your employee, people are very guarded about what they do to it for fear that they break something that's not already broken. And so, I mean, what do we do? I suppose what we do is we try and start from a needs analysis point of view. We say, what is it that you want your insurance to do for you and your staff? We then look at what you have and see how well that fits in with it, whether it's under what you need or whether it's superfluous to what you need. And we then identify the best packages that are available and indeed can tailor them to some degree to meet those needs. by doing this, then you're confident that you've ticked the boxes in terms of what healthcare should be doing for your staff, and you can also be confident that you've now had a review which has found that at the best available price in the market at the time. Stakeholders then, such as your employees, we'll take them through that process in terms of educating them to the point where we take the worry out of any change that's involved, if indeed a change is involved. And ultimately then, in terms of the headache that's involved, paperwork and stuff, we do it all. So ultimately, I think that's what an advisor can bring to the party.
Thank you very much, Patrick.